Joining us now is Ronald Wang, Managing Director of China Merchant Securities. And Ronald, I guess what we have to talk about is the triple R cut, the reserve requirement, as John was just mentioning there. That's 50 basis points. Will it make a difference? And what does it tell us about the thinking there in the finance ministry?
I think the timing of the RRR cut has come as a little bit surprise to the financial community in Hong Kong and China, because people has actually given hope on that, given up the hope on that. But anyway, it means that the Chinese government is trying to push up the domestic demand and also trying to increase the new borrowing to the certain small and medium sectors. It means that the target is to balance the slowdown in the European matters and also the export and import matters.
Okay, the thing is, it was such a surprise, though, again. We were expecting something, but not necessarily then. So,
yes.
Do we get another one unexpectedly very soon?
Well, normally they cut the rate on Friday evening, but I don't expect that there will be a near-term cut in February or in March. There may be one cut in the second quarter and maybe further cut in the third quarter. I think the Chinese government has been very cautious in cutting the RR ratio and also the interest rate.
Okay, when does it actually start cutting the actual interest rate, the base rates?
I think it is a very controversial issue because there are a lot of different opinions in mainland China and also within the leaders. But I think that they have to wait until the inflation rate has come down below the 3% before they can do that.
That's what everybody seems to suggest. It's going to 3% is the real cutoff as far as that one goes, yeah?
Yes, or when the inflation rate drop below lower than the 1 year fixed rate deposit. I don't expect that to happen in near terms, but that may happen in June, maybe 4 months or later. And that will be the first timing for the Chinese government when they have the opportunity and window to cut the interest rate.
Okay, so the question here is also going to be, what do you see in terms of growth this year? What's going to happen with inflation as well? Is inflation at the moment, okay, the surprise we had the other day was to the upside, but do you think that was a one-off?
I think the increase in the CPI in January is one-off, is affected by the food prices. And
in the new year, perhaps, as well?
But I think that we still have to wait and see until we actually see the February figures coming down. Otherwise, we cannot ascertain whether the inflation is really going down. So we have 3 more weeks to observe.
Okay. We should just actually see that as well. But what about the growth was the other part of my question too?
The growth rate in China this year will slow down to something like 8.2% or even 8%. And I think that what the Chinese government is worrying so much is that we've seen the slowdown in the business activities in China, slowdown in new borrowing, also the import-export drop at the same time. So they really have to do something to pop up the domestic demand.
Brussels going to be key?
Yeah, very key. I think what's interesting today in the Financial Times had a story that even though Greece is saying they need 130 billion euros, the FT says they might need 136. Now the Dutch and the Finns...
There was also another piece saying there was going to be 150 they need as well.
The Dutch and the Finns will not go above 130. So they've first of all got to get on board the Greek private bondholders. Then the ECB have to agree to write off 45 billion euros. Then you've got to get each of these parliaments, particularly the Germans, the Dutch and the Finnish, to say, OK, we're with it as well. So it's a long way to go yet.
Yep, certainly not out of the woods.
And the impact for China,
I think the impact will be kind of complicated because the European market is the single largest trading partner of China. We've seen the last Saturday rate cut is carefully timed just before, 2 days before the finance minister meeting. So I think that what is happening in Europe and whether the Greece crisis can be resolved in the near terms will have an impact on the trade matters on China. And also, Chinese government has indicated that it will subscribe further European bonds and it may help to
Does that
interfere.
Surprise you? I mean, it's a hard sell to the Chinese people, who are some of them already quite poor, to buy into and help and rescue Europe.
This does not really surprise me because when you look at the figures, Chinese government has actually sell some of its U.S. bonds holding and may divert some of the investment to Europe. But I think the Chinese government will adopt a very careful policy as to what amount will be put in.
It just depends, doesn't it, what they're allowed to buy as well. I mean, you can buy the sovereign debt.
Yes.
That could be a way of actually getting in to buy some of these fixed assets,
yes.
Some of these things which have gone on to the block cheaply, fire sale, as governments try to raise money.
Yes, I think so. I think we will be very carefully as to the target of the acquisition. I don't think Chinese government will buy directly the Greek debt or other Italy or Portuguese debt. They will be buying something on a higher level,
Parthenon?
I think so.
The Acropolis. Yes.
Yes.
I think they've already got quite a lot of the Port of Piraeus there anyway. So, I mean, we're looking at things which have got a lot of free cash flow here at the moment and revenue generation, that sort of things, utilities, etc. And perhaps also a way of getting into some of those high-tech industries too.
Yes, I think that the current market sentiment is has been relatively good, especially the high-tech and the technologies segments. We also seen in the stock market and the relevant sectors have been doing pretty well. I think the Chinese government or Chinese investor will be looking at those sectors as well.
Right, Ronald, we're talking a little bit earlier, we're talking about that triple R cut, we're talking a bit about Europe now. So, you know, does the market have momentum and can it be sustained after, I think we've had, guys, what?
9 weeks of rallies.
Which is a record, and if we get 10, that is a genuine record, we're in tie with anybody.
Yeah, we see the market has reacts positively to the RR cut, but the jump and the increment is kind of mild. I think that the market is still very conservative, and I don't see a wait-and-see approach to see what will be happening in Europe.
What I found so surprising about the way the markets are reacting is also on that same day of the RRR cut was also the fact that housing prices decreased in 70 cities in China,
Yes.
but you still see some of these property stocks. The Shanghai Property Index is up. I would expect to see that those property stocks would be down today.
Well, this is kind of contradictory because the house price drop actually bad for the housing developer.
But it's already factored into the share price, isn't it?
Right.
Yes.
It's been affected by the RR rate cut. People read the positive element out of it to see that they may, the financing or property company may obtain this financing more easily. But I think that is may not come true, and they will be disappointed
Yeah, I'm
eventually.
with you on that one.
Are you surprised, Ronald, by the rally? I mean, you've got 9 weeks, almost 10 weeks, maybe this week, of strong gains, whereas the world is in flux about complete crises. The US has not forgotten either. They've got a 14 trillion debt to deal with. Europe, as we know it, etc. and so on. It's easing into Asia. It does not make sense.
Well, it does not make
does it make
sense
sense?
to me because we expect the market peak, market top will reach 22,000 in 2012. But it seems like that it's reaching the peak now, and then what will be next? And then it seems to me it will be going down. It's my forecast.
Do you think this signals, though, that the Chinese, that the government there is concerned that the economic slowdown is perhaps deeper or faster than expected, that they move so swiftly to do this, or should we not be alarmed?
And because of Europe as well, that's making it harder.
I think we should be alarmed because in last week, Premium Wen Jiabao had mentioned that Chinese government will soften its, will actually fine-tuning its economic policy. So 1 week later, we see our cut. This is actually within our expectation because the economy and the import-export is slowing down very fast.
But Zeb, your point is a good one in the fact that many economists did expect this RRR cut to be before Lunar New Year. And so perhaps the fact that it happened a couple weeks after would indicate that perhaps the Chinese government also doesn't have a good handle on what exactly is in their tool belt in terms of what they should do and specifically when they should do it.
Well, and when they should do it, exactly. I mean, the fact that they do it late on a Saturday evening. We're used to these things happening late on Friday evenings after everyone is packed up for the week, but the timing is very interesting.
Yes, I agree.
But what do you make of the time? I mean, there's no real set pattern. Friday they were surprised, and it's not on Friday. It'll be some other day. So.
Well, normally they do it on Friday evening after the market closed to reduce its impact. But it chose a Saturday this time. I think it may be related to the European matters just 2 days before the European finance minister meeting. So I think it's actually closely related to that.
How many investors of yours call you up and say, Ronald, I'm pretty worried here these days?
Well, actually, a lot of investors have called me and tell me that they are kind of nervous because the market has jumped up so fast.
Are there more nervous investors now than there were at the beginning of this year?
Well, I think at the beginning of this year, people are actually kind of very cold, very cool to the market because they have no expectations. Yeah. But after 2 months, and the market suddenly went up so fast.
Well,
and
exactly.
Then,
should be in a position now where they're going, okay, it's gone up so much, can it be sustained? So do I not bother?
And there's a crisis going on.
And then you go, hang on a second.
Compared to last year.
Yeah, you've seen the run up and you've done well out of it. You think, well, hang on, this is too good to believe. I'm going to pull out. You know, you getting that?
Well, yes. I think the question is that where the market can be, the rally can be sustained. This is the main key question because after all these policy or changes, and we shall see the end results coming out, and we shall see whether some of them will be disappointing the market, some of them may be good, but I think most of them may be kind of below market expectation.
Which industry do you advise investors to absolutely avoid at all costs?
Well, first of all, I think banking is good. It's not bad. The second thing is that I think some of the investors should be avoiding the property sectors, and some retail sectors should be avoided as well, because there has been some kind of overvaluations in those sectors.
No, you've just come back from Paris. Did you feel austere there?
Yes, I was not meeting with Nicolas Sarkozy.
You were in Parliament, then.
But yes, I did pay a visit to the Parliament because I have a friend who is an MP.
Did you give a speech in French?
Did I, or did he?
Did you?
No, I sat in the visitor gallery, though.
Copious notes.
I watched the question and answer, the questions to the government, and it was very interesting. We talked about this earlier this morning, that so much of the debate, the conversation last week when I was there was, of course, France's response to the Greek situation and how France handles its own affairs. I mean, it'll be very interesting to see what happens later today in Brussels, whether they get it done.
I guess there's no sign of austerity in Nice, where you went to afterwards, was there?
No, 2.5-hour lunches and copious amounts of wine.
It's a tough life.
Yeah, hard to take.
Right, well, Ronald, thanks very much indeed for joining us. Ronald Owen there from China Merchant Securities.